Today we're talking about understanding your credit. I'm Andrea Johnson. I'm the Financial Education Coordinator for the Office of Consumer Credit Commissioner. I have 15 years of news experience where I did a lot of research, and I am married with two small children, a cat, and a fish. This webinar today is for informational purposes only and does not constitute legal advice. A little bit about the Office of Consumer Credit Commissioner. We license and regulate certain non-depository institutions such as pawn shops, payday loan lenders, and registered creditors. We protect and safeguard consumers like yourselves against abusive and deceptive lending practices, and we educate consumers and creditors about your rights and responsibilities. If you have any questions, we do have a consumer assistance helpline. Someone is physically there waiting to take your call, of course, during normal business hours, Monday through Friday, and they can answer any complaints, concerns, or questions you have about any of the industries that we license and regulate. The Office of Consumer Credit Commissioner offers financial education through me, the Financial Education Coordinator, informational seminars and webinars like this one, financial education materials like the handouts we have today, and some of those can be found on our website at occc.texas.gov. And I'm also the grant coordinator managing the Texas Financial Education Endowment. It kicks off today. So if you or someone you know belongs to an organization that is starting up or continuing financial education programs for K through 12, adults, or financial coaching, please let me know. One of our organizations this year is Girl Scouts. So we have a broad spectrum of different places and different organizations that we are helping out. And it's Girl Scouts of Northeast Texas, so way up there in Northeast Texas. Understanding your credit. Again, this webinar is for informational purposes only and does not constitute legal advice. So what is credit and why do you need it? Well, credit is just the ability to borrow money based on your credit history, your credit score, your credit report, and that will determine the terms you get for the different items you see listed here. And there's so many other things that affect your credit. But imagine, it affects what job you get. It affects whether you get the apartment in the location that you want, financing a car on the terms that you want, spreading out payments, phone service, qualifying for insurance, and getting all sorts of different loans. There's good credit and there's bad credit. Now you look at the screen, you go, well, just because I have bad credit, it doesn't mean I'm unreliable at paying my bills. This is what it looks like to a lender. When you have good credit, that just means to a lender that you are reliable in paying your bills on time, that companies are going to be more willing to extend credit to you, and they might offer you lower pricing. Bad credit to a lender, they might think that you're unreliable in paying your bills. Maybe you've had some negative accounts, but you've fallen on bad times. Maybe you lost your job. That's not in a credit report that you lost your job. High debt to credit ratio, bills are paid late, debts have been abandoned, or you've filed for bankruptcy. So any open judgments, liens, things of that, public notice records. So how do lenders determine your credit worthiness? Creditors are looking for things called the 3 C's. We're talking about character, capacity, and capital. These are the 3 basics. They want to know how you've handled your past debt obligations, which can be really hard for people who have no or little credit history. So having a short credit history also affects your credit score, your credit report, and how lenders will look at you to lend you money. Capacity. How much can you borrow comfortably? What does this mean? This means your debt to credit ratio, your debt to income ratio. And so this means they see your open accounts, they see what you have, your debt is, and then they see what you have coming in. And it's going to show whether or not you have a lot in debt or a little in debt. So how can they give you more if you're already drowning in debt? Your capital is any current available assets that you might have that if for some reason you can't pay back the loan or the debt, then they can use that asset to pay off what you owe. That I typically think of a mortgage. A mortgage is on your house. So when you foreclose on your mortgage, they get your house. When your car payment isn't made, they can repossess your car. So what is the debt to income ratio? This is pretty important. I will tell you that when I purchased a home, one of the things they looked at is not only the debt to income that I had, but also the possible debt to income I had. So if you have a lot of credit cards that are open, that shows that you have the ability to use that credit. So if you're at 10% or less, you're in great shape. 11 to 20%, you shouldn't have any trouble getting new loans. 21 to 30% to 35%, you should probably stop, getting debt or charging, but you're probably having a little trouble, maybe not getting loans, but your debt to income is creeping up there. And if you're at 36 to 50% of your debt to income, then you definitely should look into a plan in order to get out of debt. And that might be building a budget, reviewing your credit, working on your credit, paying off debt. There are 3 different credit bureaus: Experian, TransUnion, and Equifax. They do not make credit lending decisions. They maintain and compile credit information into a report for you and creditors. And if something is incorrect, you need to dispute it with the creditor and the credit bureau. Your role is to establish your credit and check your credit report. Right now, through April 2022, all 3 of these credit reporting bureaus have given everyone the opportunity to check your credit for free once a week. And this is something they started during the pandemic because there were lots of frauds going around concerning the vaccine, the virus itself, different cleaning products, and people were losing their jobs. And so they were finding themselves in different financial pictures. And I will tell you, it does not hurt your credit to check your credit report. That's why it's so important to do it, to make sure that everything is accurate. So what's in that credit report? Well, you're going to find all your personal identification information. What is that? Any names that you've had, first, middle, last, whether or not you've been married, that might have changed. Maybe you changed your name. Or maybe there's a T, I'm Andrea Johnson. Maybe there's an Andrea Johnston listed on my credit file. I need to have that fixed and I need to have it taken care of if it's there. Or maybe the E, instead of an O in my name, there's an E. Those are things you need to look out for. It's going to have employment records. It's going to have addresses that you've lived at. Anything, and your employer's addresses. All that information is going to be there. Your account information, including where the account was opened, as in the institution it was opened with, the account number, and if you had good payment history or negative history. Public record information and any inquiries stay on there for 2 years. What's not in a credit report: your race, religion, medical history, political preference, or your criminal record. A criminal record is in a background check. So it's not when someone applies for a job and they said, oh, they denied me because my criminal record or it was in my credit report. Those two are not linked. Your criminal record is separate. What is the Fair Credit Reporting Act? This entitles you to a fair and accurate credit report. That goes back to what we just talked about, in the sense that if you find a problem, fix it, and it should be fixed. For instance, someone recently shared with me that she had to go and, someone asked, do I need to remove a bankruptcy after the time limit that it's allowed to be on my credit report? It did not automatically fall off. And someone shared that she went on 2 months after the bankruptcy should have, not been on her credit report, and it took 2 months for her to get it removed. But it shouldn't have been there any longer. And she has the right to a fair and accurate credit report. The Equal Credit Opportunity Act prohibits credit discrimination. That's where we talked about those things that can and cannot go into your credit file. It goes into the fact that someone can't look at someone's face and say, well, I can't lend money to them based upon the color of their skin or a disability or any other thing that might cause prejudgment. Credit Repair Organizations Act, it prohibits untrue and misleading representations. It bars companies from demanding service payment up front, okay? And it requires credit repair contracts be in writing and gives consumers certain contract cancellation rights. So this means even if you have entered into a contract with a credit repair organization, you still have rights. You're not locked in there for life. They can't threaten you. They can't ask for money up front if they haven't taken care of the situation. So you have rights to say no, right? It's always good to know that you have other options. So what goes into your credit score? Well, the longer your history is, the better, which can be a problem for people who are just getting out there for the first time and they're working on building their credit. What is your debt to credit limit ratio? The lower, the better. I would also include open credit as an example to include in this because it shows that you have, if you have 6 credit cards that are open and they all have a $6,000 limit and they all show zero, but you're about to go and apply for a big mortgage, there might be some eyebrows raised because you have the ability to use all of that credit, which would affect qualifying for the mortgage. How many inquiries do you have? The less you have, the better. And remember that credit inquiries stay on there for 2 years. When I was in my 20s, I thought it was a big honor every time someone said you're pre-approved for a credit card, and I would get so excited and sign up for the credit card for the discount. I shouldn't have been doing that. I didn't know any better then, but now I do, and I do not do that. Do you pay your bills on time? Are there any charged off accounts, judgments, or bankruptcies? Credit scores typically range from 350 to 850. The higher the score, the easier it will be to qualify for the best credit terms. So the thing is, you work on all the things that you see in front of you right now, and hopefully it leads to a higher score. Someone asked recently about closing credit cards that they've paid off. When you pay off a credit card and you go around and you just start closing them, it will affect your score. You will see them drop a couple points here and there. I would probably, if you do want those things off your credit because you're just not going to use them, you're just going to stick to like 1 or 2 cards, I would do it gradually so that this person, their score is already at an 800. That's how they work towards it. And just kind of close, maybe the retail ones that you're not going to use again, at different retail stores instead of a major Visa, MasterCard, or Discover card, things of that nature. There are different types of credit scores. So Beacon, FICO, and Vantage. A lot of the times you're going to hear people talk about your FICO score. That's just because FICO is the most widely used credit score. It's the one that's 350 to 850. Usually 670 or above is good. 750 or above is great. And if we're approaching, that 800 mark, we're excellent. Excellent is lovely. It's exceptional. And you will generally not be turned away with a credit score of 800 or above. Again, managing those credit inquiries is a big deal. And checking your credit is not a credit inquiry because you're the one doing it. The fewer the inquiries you have, the better. Only apply for credit when you need it. When applying for a mortgage or a loan, do your shopping in a short time frame and regularly check your credit. Right now, I've looked at a credit card that I've had for a while, but I really don't like the interest rate. And I keep getting pre-approval notices from other places. And so I'm considering closing that card, paying it off, closing it, and getting a different card with a much better interest rate and a much better variable interest rate. But I'm leery because that leads to another credit inquiry. And it's a hard inquiry because it is attached to an application. So when a lender reviews your credit to make a decision, such as for a mortgage, an auto, or credit card, that is a hard inquiry. And it's considered hard because it is tied to a credit application. It can affect your credit score. Now, when you check your credit or when a lender checks for pre-approval, it's a soft inquiry and it does not affect your credit score. So as we get these letters in the mail, or you get emails, or you get notices that say, hey, you're pre-approved for this amount, sign up for this credit card. As long as you are not signing up for every little thing that falls under the sun, it shouldn't affect your credit score, correct? It's just when you fill out that application and send it back. So how do you dispute inaccuracies? Now you've checked your credit, you've seen something on there, an account you've never had, an address you've never lived at. You know, when you go online to one of these agencies, Experian, TransUnion, Equifax, they're going to ask you those questions where it says to identify that they have the right information and they're dealing with the right person. They're going to say, which one of these cars have you owned or haven't owned? Which one of these addresses is an address you've never lived in or you have lived in? And they're trying to verify that information to make sure you're the right person and make sure that that information isn't in your credit report. So if you discover any inaccuracies in your credit report, you want to complete the request for reinvestigation from the credit reporting agency that they sent you, or send a letter listing each incorrect item and explain exactly what is wrong. Now, it says listing on here. What I would say is just tackle one thing at a time. Don't take on too much and feel overwhelmed. If an investigation does not resolve your dispute, you can add a statement of 100 words or less to your file, and you should contact the creditor. This is what it kind of looks like. So first you notice that wrong information. You disputed the account with the credit bureau. The credit bureau checks with the creditor. The creditor has 30 days to investigate and respond to the credit bureau. 30 days. If the creditor doesn't respond, the information must be removed. If the creditor does respond, the item will be either deleted or verified, and a new copy of your credit report is issued to you. You are entitled to a statement of no more than 100 words or less to explain the negative remarks. So, for instance, again, the person who had to go and make sure that the bankruptcy was taken off. The bankruptcy should have fallen off 7 to 10 years after she filed, and it was still lingering on there. So she contacted the credit bureau and said, hey, get this off of here. It's affecting my credit. And that's what she did. And so she took care of it. So what can be changed? Information that is incorrect. So what does that mean? Your name, your last name, any account information that's not yours, that you've never held, and you will have to verify that information. Inaccurate payment history. So if it shows you had a negative account and you really didn't, that's something you can dispute. And any old information like the bankruptcy. And, you know, I have that handout today that shows the different timelines of things and how long they can stick around on your credit report. But keep in mind, a lot of the times when it comes to things that are on your credit report and their timelines, they have timelines. They have legal timelines in which they can be on there. So just because you don't like it doesn't mean it can be taken off. For instance, any information that is true, public records, history of payments, accurate credit inquiries. Someone asked me because a phone company hit them twice. They were in the store or online. I'm not sure how. She contacted them, but the phone company hit her account twice to check for her credit at the same time, and one should have fallen off. Should you place a fraud or freeze alert on your credit report? So a freeze generally stops all access to your credit report. It is available to anyone and it is temporary until you remove it. A fraud alert, a business must verify your identity before issuing your credit, and it remains in effect for 90 days. So you must contact at least one of the three major credit reporting agencies by phone or online in either to put a fraud or a freeze on your account. And like I mentioned a little bit ago, someone else I know, she and her husband were receiving all these credit cards and they kept asking each other, did you apply? Did you apply? And the answer was no, of course. And so they looked at their credit and they found all these accounts. The problem is, although those cards were coming to their address, they had no idea how many cards weren't going to their address. So all of these things are being opened. And so they've just left the freeze on their credit report. They've left it on there. And so anytime they need access to their credit, they would have to contact the credit reporting bureau and have it removed. And so they've just left it on there. So it really helps her when she's deciding whether or not to apply for a loan or credit card. She's going to have to make that extra step. She and her spouse are going to have to make that extra step to remove that from their credit reports. So it kind of also helps them with overspending. Keeping your credit in check. So what does that mean exactly? Well, first that means living in your income, living within your income, right? So don't overspend. Don't whip out your credit card each month trying to make ends meet. It can be a cycle of debt where you're just going to drown and drown and drown. And that balance on that credit card is going to go up and up and up. And you're going to be fighting those high interest rates possibly. Impulse spending can lead to financial problems. If expenses exceed income, you can have three choices. So you can increase your income, reduce your expenses, or go into debt. If your income exceeds expenses, the extra money can be added to savings or used to other purposes, such as paying down your debt. So that's one of the things you can do to kind of help keep your credit in check, right? So what about reestablishing your credit? Well, you can reestablish your credit by having stability in employment, payments, and your residence. So your longevity in these different items in these different areas will help you to establish your credit. Patience. It's going to take time to reestablish your credit. And remember that you have to be slow and steady. If you find more than one thing on your credit file that's inaccurate, focus on one thing at a time. Don't try to tackle everything at once. You can also apply for a secured credit card, a secured account, a loan or a credit card that's secured by a small savings account. I think these are great for people who don't have a lot of credit history, or maybe they've had bad credit history and they're trying to reestablish themselves. Consider the pros and cons of debt settlement. While a pro might be that debt settlement can get your debt taken care of for much less than what you owe, the other side of it is that it can be on your credit for a while. And the last time I looked this up, it was at least 7 years for debt settlement providers. Debt repayment. I like to talk about these because there's the debt snowball and the debt avalanche. The debt snowball just means that you're paying the minimum payment on everything and anything extra goes to the smallest balance. I think this is great for people who want to see immediate action. So you have a small balance, and if you just tackle it, you've got $200 on a credit card, just tackle it and get it paid off, then it's gone, right? And yes, it's going to be frustrating if the higher interest rate on the other one just keeps eating up at your credit limit, but you're going to go after that one. So the debt avalanche, though, is pay the minimum payment on everything, and anything extra goes to the highest interest rate. This is good in the instance if you totally hate seeing those high interest fees and charges. So this one, you're going to let that little card, however the balance is, kind of sit there, unless it's the one with the highest interest rate, and you're going to go after it instead. Consolidate your credit cards by considered balance transfers and watch for the fees. What does this mean? This means that you see all those offers that say, hey, 0% interest for 12 months for balance transfers and spending and cash back and all this stuff, right? If at the end of those 12 months, you still have a balance, you haven't paid off your debt, you will be charged the interest for the last 12 months, usually. I would be very surprised if the credit card company did not do that. And you'll be left with whatever balance you have and whatever interest rate it says on there. So if the proposed interest rate is anywhere from 12.9% to 25.9%, look at what it says for balance transfers. They're not going to be charging you the variable interest rate on regular credit purchases. They're going to have been charging you for the balance transfer interest rate if you don't have it paid off within that time frame. If you haven't already, stop using credit cards or other debt to finance your living expenses. What does this mean? This means, like myself, I'm a state employee. I assume a lot of people today are probably state employees on the call. And if you are getting to the end of the month, right before payday, and you're whipping out that credit card to make a purchase, figure out why. Where are you spending the money? I talked to someone yesterday who said she couldn't understand, why she was running into such a problem each month. And she looked at her budget and realized she was spending probably about $200 on clothes that she hadn't budgeted. And so it was causing a problem. Allocate extra money to pay debt. So if you have a raise, if you have a promotion, if you have a side job, that's great. Use that money to pay off your debt. This person told me that they specifically took a part-time job to pay off their student loan. Every time they got a paycheck from their part-time job that they took up on the side, they paid it towards their student loan, in addition to what they were already paying, because they were just tired of seeing the student loan debt. Ask for lower interest rates. This is possible. I had someone tell me one time that they called and they got lower interest rates on about 6 different accounts. They didn't refinance or anything. They didn't close and reopen. They really did just ask and it was given to them. What are some suggestions for increasing income? And I would love it if you guys have any suggestions. Check your paycheck deductions. Are all members of the household chipping in? And we're not talking like their whole paycheck, but $20 a month towards electric or water or groceries or whatever it is. Do you have a talent to increase the income? Sewing, crafting, bookkeeping, something you could do on the side. Do you qualify for any government benefits? Can you get a part-time job? Or consider selling what you don't need. These are things, aside from a part-time job, because right now a full-time job and 2 small children, I know I couldn't do that. But there are other options on here for you to look into and to consider. What about decreasing expenses? The first one on this list always stands out to me because I find that if I shop alone and stick to my list, I spend less money. If you do curbside or delivery for your groceries, you will spend less money. I think about the fact that when you go into a big box store, there's a reason why the toothpaste is not on the same side as the milk or the chips or this or that, because they want you to walk across the entire store to look for these different items. Carry a lunch to work so you're not eating out. I love taking my lunch to work, but it's because I don't like running into the what are you gonna eat today? Where do you want to go today? What's going on today? I just want to eat. And I typically want to eat at 11 o'clock. I'm not good for eating with other people because noon, 12:30, that's a little late for me. Entertain at home. Love it. I love it. So much less stress when people come over, when people bring food and drink and laughter with them to my house. And my kids can be rowdy and crazy. So not only am I saving money, but I'm saving stress, physical, mental, emotional, and financial stress. Shop at the end of the season. I have a friend who always does big shopping in the summertime because, she told me that uh, Walmart and Target usually have big sales in the summer, and that's when she stocks up gifts. She stocks up gifts for her large extended family so that throughout the year, when a birthday or holiday comes up, she just goes into her closet, picks out a gift and wraps it up. And there you go. She saves money and time, mental, emotional, financial stress saved. Carpool when you can. Reduce spending in categories that are not necessities, such as housekeeping, gym memberships, donating time instead of money, cut your cable channels. We have not had cables since we moved, what, 4 years? We got rid of cable 4 years ago. We have an antenna for local channels because I like to watch the news still. And we have streaming services that we pay yearly. Well, I will tell you, going from a cable bill that eventually, after their nice little introductory rate, crept way up there, I was no. On a monthly basis, why should I pay upwards of more than $100 a month? No. How does a financial goal figure into your life? Well, there are short-term goals, intermediate goals, and long-term goals. Short-term goals are going to take less than a year. Someone recently contacted me and said they were able to save $1,000 for an emergency savings account. In the grand scheme of things, you might go $1,000 for an emergency savings account. I will tell you, that's quite a bit of money for the little things that might arise, like having to fix your passenger side mirror on your car for $200. That would come in really handy. Small household repairs and a weekend getaway. Those are things that account for a short-term financial goal. What about intermediate goals? Those are going to be 1 to 4 years, like a down payment on a vehicle, an extended vacation, or major home repairs. Long-term goals take 4 years or longer. So we're talking about a down payment on a house, buying a new boat, and retirement. Retirement is something that we really just keep working on and working on and working on. And hopefully, unless you're a contract employee, you've had employers who have always chipped something in, or not chip something in, but that's a part of paying you, your retirement goes, part of your money goes there. So you haven't really looked at it. Now, when it comes to savings, retirement is part of that, but we always want to save on top of retirement. It's good to have that little cushion. Now, if you establish those financial goals, how do you achieve them? Well, you write them down and make them visible, and be specific and make them achievable. More than likely, you're not going to be a millionaire in a year unless you're really good at investing or you win the lottery. The likelihood of you know, having $1 million and at the end of 12 months is probably not that achievable. So you want to write them down and make them achievable. And you write them down so that you physically see them when you're going to make a choice about something else. You can go, no, let me put that off. I really want this instead. How much is it going to cost you? Not just the money, but your support system and the necessary sacrifices that they are going to have to make. I always talk about the fact that we need to put a deck in our backyard, or we would love to have a deck in our backyard. And financially, that's a goal we have to work together with. But I know that my husband is physically going to sacrifice more than I am, right? I might be there to kind of help, but I might, hand a screwdriver to him, but he's going to be doing a lot of the heavy lifting. Communicate those goals and rank them in an order that is important to you and your family members. Establish a timeline. So if you want to save $1,000 for a down payment on a car over the next 18 months, you will roughly need to set aside $56 a month. In my household, that is not eating out 1.5 times in the month. Family of 4. Small children, but they eat a lot. Be flexible and keep your eye on the prize. You may have to compromise and reset because things are going to happen. You are going to break the mirror on your car. You might get a speeding ticket that you weren't counting on. Your pets might need an emergency. They might need a visit. Something might come up that you're just not counting on, and it might happen. And just don't beat yourself up on it. Just take a step back and start plugging back into that savings account and reaching that goal. Saving for that vacation, saving for those concert tickets. Maybe you've never been to Austin City Limits here in Austin, and it's something you've always wanted to do. Well, 1 day and 3 day passes are pretty expensive. And they go real quick. So that might be something you work towards, traveling all over the country or just traveling across the state of Texas. Those little trips require gas money and lodging. Key takeaways today is to give you consumer confidence. If you are working on your credit and you're understanding your credit, you're building your credit report and history and score, making it better, you will have consumer confidence. I will tell you that when I walk into a car dealership and I want a new car, I don't wait for them to tell me what they can do for me. I tell them what they will do for me. And I say car dealership, but that's typically where you hear people saying, oh, we had to haggle over it. And you hear the people say, oh, we're not going to haggle over it. We're just going to, we're here to help you. I have not had that experience. So I am like a barracuda when I go in there, but that's because I feel confident that I can be a barracuda. It saves you money by helping you to lower your interest rates, your terms on your loans, mortgage rates, things of that nature. You're going to get better terms than someone who has bad credit if you have good credit and you understand your credit. And it might just be a plight of understanding your credit. Let's say you know that your credit is bad and you go to the creditor and you want a new car, you want to refinance your car, and you go, look, I know I have a bankruptcy on there. The bankruptcy's been on there for 6 years. But if you look at the rest of my credit, you'll see that everything else is in good standing. I've paid off a car, da 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 da. You know this because you've looked at your credit and you understand it. You can also take control of your finances. So the more you understand your credit, the better prepared you will be to take control of your finances and know where you can go and what you can get. I'm Andrea Johnson. I am the Grant and Financial Education Coordinator for the Office of Consumer Credit Commissioner. If I wasn't able to answer your questions today, or you would like an in-person presentation or a presentation online for your organization or business, please contact me at financial-education@occc.texas.gov. You can also find us on Facebook at Texas Financial Education Endowment, and you can follow us on Twitter at Financial Ed Texas. I'm going to stay on the line a little bit and answer any questions that have popped up, and thank you for joining me today.